Good morning, traders. My name is Frank Chali. I'm a senior market strategist here at RJO Futures. And today I'm going to give you an update on the equity markets. Today is Tuesday, September 8th. In the outside markets, the treasuries are a little lower, the dollar's a little lower. So those, and gold's also a little lower. Those safe haven trades we've seen recently, all a little easier, while we have the S&P markets up 31 or 32 points. Around 1953, 1954 is the price of the E-mini futures right now. On the report side, the calendar's rather light today. We have a consumer credit report this afternoon, not a big market mover. We have the unemployment report behind us from Friday, which was rather kind of mixed signals there in terms of strength. And then next week we have the Fed announcement. You know, will they go or will they hold? That's the big question. And what we have going on here today in the equity markets, in my opinion, is just a bit of a short covering rally. We had a big sell-off in the market. We did see a 10% correction already. And the question there, you know, and you can ask 50 different people and get 50 different answers maybe, is this just a normal correction, or is this the beginning of a big bear market? And it's really too soon to tell. We're going to have to wait and see how the market handles a retest of that 1850 to 1831 range. 1831 is the actual swing low, and I think that the market is likely, after a little bit of consolidation, maybe up here in this area, to move lower, test that area, and see if the market, you know, responds well in a positive way. Do the buyers come in and defend that level, or do we take it out and have a deeper run in the market? Now, there's been a lot of concern about the global slowdown, especially, you know, driven, you know, by fears of China slowing down. That's obvious. They are slowing down. You cannot continue to grow at the rate of 9, 10, 11%. So we'll keep an eye on that and see if we retest that. 1900 is kind of a big level. Thursday and Friday last week, we had some heavy selling pressure in the market, but 1905, 1907, that held up pretty good. So 1900 is kind of a pivotal level in my mind. On the downside, if we can get a good sell-off and close below 1900, then I feel confident that we'll be to 1850, 1831 relatively quick. On the other hand, we're currently at this time a little above 1950. So on a closing basis, above 1950, the market gets a little friendly. Perhaps we revisit last week's high, 1975. A lot of sellers stepped up when we got to that level last week. I wouldn't be surprised if, you know, the sellers are aggressive at 1975. But there is a lot of volatility. We're going to have these big ranges. That tells you that the market's uncertain with these levels. And as long as we could keep the market below 1950 today, I feel confident that we're going to go test 1900 and then again see where the market closes at that point. That's all I have time for now. Please feel free, if you want to discuss some strategies, give me a call. My number is 800-826-4124. Thank you. And as always, remember that trading commodity futures or options on futures involves substantial risk of loss and is not suitable for everyone.